Yeah, we can talk about that a little bit more in a second, but before we get there, let's jump into labor, all the labor reports. We've had a lot of labor reports drop since our last call, and they have had a pretty significant influence on the bonds market, which has influenced mortgage rates. So can you update us on what are we seeing in the labor reports, and how or why are those affecting mortgage rates the way they are?
So, like we've been talking about for months now, right? Months on end, when these BLS reports would come out and these numbers were super inflated, and then we would meet back up in a couple of months and we'd see these numbers revised over and over and over. And that happened from, I mean, shoot, the numbers that we were talking about from last year. It's been happening since from last year all the way through June. These numbers have been revised by hundreds and hundreds of thousands of jobs to the less, right? So going back now, the numbers that are being revised from June might actually show the first negative job growth in a very long time. So the job numbers are starting to come back a little more accurate, and it doesn't look like the jobs are there, right? So when it comes to what does the labor reports have to do with rates, right? When it's strong job growth, more people are employed, higher wages, the risk of inflation is going to go up, so are rates, right? But if it's weak job growth, the rising unemployment, less spending, lower inflation, the rates are going to come down. And so we're kind of seeing that, right? The tale of 12 months. 12 months ago, there it was. We were seeing these crazy job reports. So the Fed was like, wow, lots of jobs, lots of money, lots of people spending, high inflation. The rates got to follow that. And these rates follow expectations as well. So as we're seeing these jobs numbers, as the Fed is already talking about cutting these interest rates or cutting the Fed fund rate, excuse me, the interest rates have already taken that into consideration. And that's why you're seeing this fall. So they're going to follow suit with if the job number is strong, you're going to see rates kind of back that up. If the job number's low, same is going to be true.